Hello and welcome to the Good, Bad and Ugly weekly review for 7th of March, an important week that has gone by. We'll talk about the markets, but first a look at what was delivered from the weekend investing research desks. So a lot of content, uh, market knowledge and insights from various fields of the market, whether it is behavioral uh, aspects of it or overseas market. There are many pieces, content pieces that are being sent. So there were some on exit decisions, then another story on Buffett indicator, one on geofinancial, why it's running away. What is your plan if Nifty goes to 100,000? Um, Beat index concentration by strategy. Some data, shocking data that was for premium members. Popular narrative may not mean better investing, and a lot of learnings from buy and hold on Eban offshore. Many more such content pieces were available on the Weekend Investing app. They are available in the video format. They are all available in the blog format. Also, you can have them on the email format into your desk in the evening. Nifty this week, bit volatile, but overall, we see the week ended in a positive note. The market has ended very much at the all-time high, so no complaints there. On a weekly basis, you can see this is the fourth week running that has gone in the green, and the trajectory is very strongly up. In terms of the benchmark and weekend investing strategy this week, you can see that Nifty moved up 2.3%, Nifty Next 50 and CNX also moved up in the same range, CNX 500 up 1.7%. Mid and small cap is where there was no gain, and small cap index actually ended in the red. But this did not deter many of the strategies. ATH leaping up 6.8% this week, is up now 66% for the financial year. India top 10 up 5.5% when Nifty is moving 2.3, up 63% versus Nifty of 29. This has been the most remarkable uh, strategy this year. MI Evergreen also moving up 3.9%, up 68 for the year. NG 50/50 is up 3.6%. NNF 10 up 3.3% against 93.8% on large cap. This is unheard of, especially comparing to 59.6% on Nifty Next 50. MI 30 was flat at 0.6%. MI All Cap was totally flat, but financial year has been great at 89%. ATH2 at 35, MI 20 and HNI Wealth Builder lost some ground, but the gains for the financial year on them have been very good. PSU banks again coming back up 6% this week. Metals up 5.7% this week. Public sector enterprise stocks up 5%. Commodities 4.2, energy 3.8, and others following suit. So reasonably good gains this week, except IT stocks, which lost 1.6%. Real estate remains the biggest winner in the financial year, 136%. Public sector enterprise stocks at 114.6. In terms of sectoral momentum, you can see a sharp fall in sectoral momentum in the weekly basis in PSU banks. Autos coming up very rapidly. Public sector enterprise stocks also leaping back. Gold, of course, is running hard. Metals are running hard. Infra stocks are improving. Real estate has taken a back seat. You can see the ranking has gone down 2 weeks versus 1 month, although on a 6 monthly or 3 monthly basis, it is still in the top four. Uh, so this is particularly useful for just generating a sense of where things are. This is nothing, sacrosanct in terms of how each sector will play out, but just a nice view of where things are going. In terms of the weekend investing strategy spotlight this week, the spotlight is on the new product, HNI Capital Compounder. As you all know, we started a HNI segment where we tried to essentially the limited number of participation stocks that can handle higher volumes uh, and some additional support systems for this group and some benefits But besides that, essentially concentrating on just one or two strategies. So HNI Wealth Builder was our first strategy in this mid and small cap, and now we are adding the complementary strategy for this segment. So HNI Capital Compounder will be the perfect uh, uh, you know, complement or supplement to the HNI Wealth Builder. And you can see the numbers here are amazing numbers for large cap and mid cap stocks. Since 2016, this strategy would have given you 386% returns versus the CNX 200 at 199.1%. So the universe is CNX 200. We've also this time what we've done is we started the strategy on September 21, ran it live for 2 years and 5 months on our own money, and now we are offering it after testing it out thoroughly. So in this period, we've gained 81% on the capital compounder versus 29.5% on CNX 200, which is fantastic returns here. The CAGR is right there in front of you. ROMAD ratio is great, both in the historical test as well as the forward test that we've done. 3 and 4 year rolling returns is amazing, currently at 37.3% versus 16.9 on CNX 200. 4 year rolling returns is even better at 38.5 versus 20.2. So all statistics point to a very decent kind of an outcome. It's a weekly rebalanced strategy. Does not mean that stocks change every week for sure. Sometimes there will be changes, sometimes there will not be changes for weeks together. Diversified 20 strongest stocks out of CNX 200, very high quality stocks, large and mid cap universe. Core focus remains in this segment on capital protection and gradual wealth creation. We are launching this on 17 March at 11 a.m. There will be limited slots. So please go through the brochure. We've linked it below, and all the details about this strategy are here. You can connect with us. You can book a call with us to know more, and we'll be happy to share all the details with you. Thank you so much, and I will see you soon in next week's edition. Thanks.